Known as the Oracle of Omaha, Warren Buffett is the best investor in the world. Buffett is primarily a value investor, but he also shares a variety of other insights at shareholder meetings and in his annual letter to shareholders. As a result, Warren Buffett's investing theory is rather simple to grasp. Do you want an investment strategy that the Oracle of Omaha would promote? You don't have to go through financial statements for hours. Warren Buffett believes that a basic technique is the greatest method for the vast majority of individuals to invest. Even if you don't watch the stock market, here's how the iconic chairman of Berkshire Hathaway thinks you should invest. Here are the top 5 investing tips for Warren Buffett. But before we get started, be sure to subscribe to our channel and ring the bell to get notified about our latest videos. Number 5. Cash is the king. Warren Buffett values cash and keeps a large amount of it on hand at all times. Warren Buffett keeps a big amount of cash on hand to both endure exceptional losses and quickly seize acquisition or investment opportunities. In his 2011 letter to shareholders, Buffett also reprinted a statement from his grandpa in 1939. "I have known a great many people who have suffered in various ways simply because they did not have ready cash. I sincerely hope that never happens to you." Even if that sounds like personal advice, you should keep an emergency fund for the future. You also should retain cash in your brokerage account so you can buy stuff cheaply. For example, if you had cash on hand when the financial crisis hit, you could have bought low and sold high, earning 50% to 100% returns on your investment. However, if you had invested everything, you would have lost a lot of money. Number 4. Invest in S&P 500 index funds. Warren Buffett is without a doubt the world's most well-known investor. According to him, ordinary people should not invest in particular stocks. Adopting years, he has advocated for the S&P 500 index funds as the greatest approach to accumulating wealth. By purchasing an S&P 500 fund, you automatically become an investor in all 500 firms who shares the index monitors, including Berkshire Hathaway and several of its top holdings such as Bank of America, Coca-Cola, Apple, and American Express. In his will, Buffett specifies that 90% of his wealth be put in S&P 500 index funds. The remaining wealth will be invested in short-term U.S. Treasury bonds. Although Buffett has long supported index investing, Berkshire Hathaway has just recently added 2 S&P 500 funds to its portfolio. In February, its 13F filing showed that it had purchased shares in the Vanguard S&P 500 ETF and the SPDR S&P 500 ETF, albeit the funds together still account for less than 1% of Berkshire Hathaway's assets. Number 3. Dividends are a friend of yours. Warren Buffett, like other value investors, is a big fan of dividends. Dividends are a nice reward for purchasing a company, since they usually indicate that the firm's finances are sound enough to warrant paying out its hard-earned cash. Companies with a lengthy history of paying dividends, and even raising them over time, appeal to Buffett. The dividend aristocrats, which are companies that have grown their dividends over the last 25 years, are a popular tracker of these type of equities. Furthermore, Buffett has stated that there is a fair likelihood that the total amount of dividends paid by his Coca-Cola holding will soon exceed the amount he paid for the shares, which is an incredible return. Number 2. Purchase and hold for a long time. Warren Buffett has maintained his positions for an extended period and continuously reminds his fans of this. He has stated that he prefers to buy and hold for the long term, and it's accurate since he's held several of his positions for more than 20 years, which is an eternity in the investing world. However, he has also stated that this does not imply that a corporation should be held if the fundamentals have altered. Buffett continuously monitors his portfolio, and if a firm loses its competitive advantage or dominance, he will sell or reduce his holding. He also believes in the concept of patience. Essentially, instead of trading, invest. Find firms that interest you and wait for the best pricing. Buffett is believed to have a list of hundreds of firms in which he wants to invest, but he is waiting for the perfect price and chance. He last went on a buying binge during the Great Recession when stock prices collapsed. He was able to snag deals and lock in rates that resulted in significant returns in the years that followed. Whether you follow his advice and invest in passively managed index funds or pick your stocks, he recommends ignoring short-term performance and focusing on 4- and 5-year averages. Buffett believes that if you invest across the stock market, you can expect good long-term returns. Number 1. Always invest in undervalued stocks. Buffett is a huge value investor who searches for inexpensive stocks based on their inherent value. He calculates the intrinsic value by reviewing the company's fundamentals for at least the last 5 years, and occasionally for much longer. He is particularly concerned about return on equity, operating margins, and having little or no debt. He examines the company with its peer group and looks to see if it's undervalued. A crucial element of this is also looking for companies that have a monopoly or a unique quality that will allow them to be successful in the future. This might be technology, even though Buffett avoids tech stocks he doesn't understand. All of these elements can have an impact on intrinsic value. So, guys, that was it for this video. What did you think about our video? Let us know in the comment section below, and if you are new to our channel, be sure to subscribe and ring that notification bell to get notified about our latest videos. Thanks for watching.